This is James Altucher at TheStreet.com TV, and we're going to talk about investing with Jim Cramer. In particular, I want to talk about something you mentioned in your book that I thought was very interesting. You check out the analysts and the sell ratings they put on stocks, and you try to game. Obviously, when an analyst goes from a sell to a buy, or even a sell to a neutral, you try to game when that's going to happen, because obviously the stock's going to rise.
Let's use one that just happened. LVLT, Deutsche Bank has been out there saying this thing's going to zero. This thing's going to zero. It's got a sell on it, okay? I say going to zero because they had a sell on when it's at 3. So where do you think it's going, okay? Today he upgrades from sell to neutral, and he bumps his price target to 5 from like 4. Now the stock's at 6. And, that's a gameable thing. Because when you have a sell and the stock doesn't come in, eventually you have to fish or cut bait. You can't just keep if the fundies get a little better, you have to change your mind. That's a microcosm of what I like to do, which is to look at when people are being dragged, kicking and screaming, because it does propel a stock. These people are not wolves that are crying, that nobody knows about. They can propel stocks, and I like upgrades and sponsorship. Now, when everybody sponsors it, James, then you got to go. But, you don't have those situations very often.
Well, it's interesting. So I took the metrics you described in your book and basically set up a portfolio on Stock Picker, the Mad Money Wall Street Contrarian plays. So I looked for stocks where there was a bunch of analysts with a sell rating, and the stocks were 50% above their lows. Because you specifically say analysts don't want to admit they're making mistakes, so they'll start scrambling to upgrade.
They can't by nature, because it is, this cuts to what we were talking about in a previous video. They're visible. When you're visible, most people don't have the confidence to go the other way. Now, it was very interesting. And again, using the paradigm of the Deutsche Bank upgraded LVLT, nowhere is it that he was wrong. Nowhere. Instead, what it is that it's still a bad situation. It's not even improving. But I go to a hold. Now, he couldn't, people can't admit because they either lack confidence or because what they really want to do is try to do it under the radar screen. I try to bring people's attention to it, not just because I want to humiliate, although that's clearly part of the problem. If you can get people to recognize that it's a sin to go from sell to hold without admitting it. I will never hit a guy who says, I got it wrong. Because in America, we like guys who admit that they got it wrong. I got Coldwater Creek really wrong. I own that. That was my mistake. And, I had to downgrade it in the equivalent of the forum I use in Mad Money from hold to sell at 20. Very, very painful. But the company might be falling apart. Remember, there's Warner Music Group just reported a really bad quarter. I don't like Warner Music Group, but I would take it from a hold to a sell if I was covering it. Now, it's embarrassing. It was at 27, so now 20 you're taking it to a sell. Advanced Micro was at 27, 20 you take it to a sell. But if the fundamentals are falling apart, it's incumbent upon you to downgrade. And if the fundamentals are improving, it's incumbent upon you to upgrade.
Well, so let me ask you about some of the stocks that have sells on them, but the stocks are moving up. Like AEOS, American Eagle Outfitters, the retail chain.
I think there are people who have sells on them because they're looking at their own little universe and saying, okay, I got to be recommending Abercrombie, and then I'm neutral in aerospace style, and against that, I hate AEOS. They should go outside themselves and realize that teen apparel is pretty good, and just put them as a hold. Now, I know Elliot Spitzer was adamant that there should be more sells. In certain sectors, you should not have a sell on something that actually may be better than, like AEOS may be the worst in the teen apparel, but the teen apparel group is a lot better, say, than the aluminums. People don't look at, other than if you're a specialist on retail, you don't look at the vast panoply if you're that person. But you would if you're everybody else and say, boy, AEOS must be bad, and so let's short it. No, it's just not as good as A&F.
That's really interesting. So you get all the analysts doing teen retail, and so they're saying this is the worst, so they put the sell on it. And yet, at the same time, though, analysts have been upping their expectations on earnings. The stock's going up. It trades at just like 10 to 12 times cash flows. So at some point, maybe there's upgrades or they reverse direction. So another one is Radio Shack, RSH. A lot of sells.
Boy, this
Goldman
is
Sachs
amazing,
just
Radio
put the buy.
Shack. I look at this and I think, how much of a miracle worker is Julian Day? That was the wrong perspective. I thought it would go up. I didn't think it would go up this far. What was really the issue there was how bad was Radio Shack before Julian Day came in. One of my friends and my cousin, Jonathan Cramer, writes it up for for Callan. And if you sit down with him, he'd say, listen, I was in the Radio Shack in Atlanta. They sold bullhorns. And I went to their desk and said, how many bullhorns have you sold? He said, we never sold a bullhorn. Well, I mean, bullhorns take up space. I mean, I love that just as a paradigmatic example of how poorly run Radio Shack is. And I'm just kind of shocked that the company was as bad as it was, and that they bring in someone from the outside, it almost had to improve.
Well,
I wish I'd gotten on that.
It's interesting because I'm noticing on Stock Picker who's accumulating that. You have Hayground Cove, which is a good kind of retail analyst turned into a hedge fund. So it seems like some hedge funds are starting to accumulate the stock.
It's really interesting you mentioned. I was going to do Radio Shack as a turnaround play on my TV show, but it outran me. It outran me. I mean, it basically went up 7 straight points. I was looking at a Circuit City downgrade today by Goldman's, thinking if I could make a case for Circuit City. I can't, because Circuit City has done a lot of wrong things, but it may not be maybe broken. Radio Shack, because of its brand name and its locations and its omnipresence, is simply not a broken situation, no matter what management tried to do to break it.
Well, again, we have this portfolio on the Mad Money Wall Street Contrarian Plays portfolio, and we'll be updating it every few weeks.
I love that. I mean, again, I come back to where do we get value added? Looking at previous information or looking at directional / homework done by others. I don't understand why anyone would want to reinvent the homework that's being done on Stock Picker. What you do want to do is you want to evaluate whether one's better than the other.
Well, it's interesting because one of the funds in Radio Shack is Olstein Capital, Olstein's mutual fund. He was big in Joann's stores. It worked out for him. And so you sort of say, well, he knows his retail.
Bob's very good at inventory work. And Bob's a friend of mine. I put my dad in his fund 15 years ago. I mean, called him and said, listen, I'm going to put my dad in, you're going to let me down. This guy is really a champion. But his main work is inventory. And that is a good sign if he likes Radio Shack.
Interesting. Well, thanks again. This is James Altucher and Jim Cramer at TheStreet.com TV. Thanks.